Hello, this is Mike Swanson of WallStreetWinner.com. I'm doing this video to help you arm yourself with the financial information that you need to survive and thrive in 2019. There are people that say information is power. I say information is money. And a lack of information at critical times in the market can be extremely costly. And I think these ideas are going to prove to be the case more this year than perhaps we have seen in over 10 years. Now, over the past 90 days, in the last 3 months of 2018, we saw the stock market begin to make some wild swings. And these swings have created heightened emotions among people invested in the stock market, even a feeling of confusion, in some cases hopelessness. And this is frankly because the people in the market feeling these emotional swings don't really have, I believe, the correct information to navigate this situation. On Friday, on CNBC, the stock market did go up quite a bit. I think it was, well, over 700 points in the Dow. It might have been over 800, but regardless, Jim Cramer came on television and said that rally day may have put what he called the Trump rally back on course. That one day's action in the stock market has now made him extremely bullish on the market for the rest of this year. I don't think you should take that much of importance out of one day's action in the stock market. In my view, the stock market is still in a primary downtrend, a bear market. It's trading below its turn-day moving average. That's a stage 4 decline when the market's as far away from the moving average as it is for as long as it's been, and now that moving average is going to act as key price resistance. We have seen stocks like Apple completely crumble. Stocks such as Nvidia are still in collapse, even with their recent bounce. It doesn't even look like much of a bounce at all. The same is the case with Facebook, which is really a nightmare stock situation for people still holding it. Yes, a few days of relief is nice, but what is going to happen 90 days from now, even 30 days from now in a stock like Facebook? We know it's going to most likely be ugly because the primary trend remains down. It's still below its 200-day moving average. Now, many people that you see in the financial media disagree with what I have just said. If you turn on CNBC, Fox Business, and read the mainstream financial websites, you'll most likely see someone or read someone that tells you to ignore the drop, to simply hold on no matter what is happening. And this is a difference of opinion I have with them. And frankly, some of this is based on a different philosophy on how one should navigate the financial markets. There are many people that believe that you should be fully invested in the stock market at all times, no matter what is happening. In fact, most investment advisors will even tell you to do that. And I think that's a big mistake for people because bear markets come around. I've seen 2 big ones in my lifetime, and I believe we're heading for one of similar size and duration. But historically, over the past 100 years, when there's been a bear market, there's been a 40% decline in stock prices. If someone's 100% invested in the stock market and they lose almost half their money, that can be devastating, especially if they're over 60 years old. But even if they're not, it's very difficult for somebody to hold on an investment account and experience such big losses without selling out. And it is true that over the decades the stock market does go up, and that's why the typical person on CNBC in the investment advisor world will say, remain invested, because if you don't, you'll miss out on the future gains. But it's very difficult to lose half your money and not sell. It's very difficult. So my solution is to diversify, not be 100% invested in the stock market, and also to look for ways to profit when the trends change, because there's sectors that go up no matter what the stock market's doing. As Cramer likes to say, there's a new bull market somewhere. And the last two bear markets, there are defensive sectors that went up, defensive asset classes that went up. Gold, for example, went up both in those last two bear markets, and gold appears to be going up again. So it's not like let's be 100% invested or cash. It's not the choice. It's to, I believe, move into where money is still can be made. And that's what I'm doing. That's what I advocate people do. But what this is between me and people, the so-called mainstream financial world, is a difference of opinion. And I still respect people such as Jim Cramer, such as the people on the Fast Money Show, because I know that they have skin in the game of some sort. They have investments, they have stocks, they have trades just like I do. And we may disagree on which are the best trades to make, but they are in the game. And what I want to talk about in this video is something new that I have realized that is happening in the financial markets at this moment. We're in a moment in which we have come off a bull market top. The first dip is typically, when this happens, is the stage of denial. Bear markets end in capitulation and despair. That's when the people lose 40% of their money. That's despair. But the first drop is typically the denial phase. And it's called that because people try to ignore what is happening, look for excuses to explain it, justify holding on, and just denying what's going on. And that's where we are, and that's playing out in the financial media, just as I saw it play out in 2007 and in 2000 when those tops happened. But now it's also playing out in political discourse and in the so-called alternative media itself. There has been an explosion in alternative media with figures that have mass popularity, such as Alex Jones. And I'm not trying to pick on him. I'm just saying he is the biggest one of many. There are many other people. And I'm not even saying don't watch Alex Jones. What I am saying is that Alex Jones's rhetoric and the rhetoric of much of the alternative media on YouTube when it comes to politics is based almost solely on emotion, with very little facts to back it up, much less proof. And this is really what you basically encounter with extreme political partisanship, whether it's on the left or the right. It does not matter. The political partisan caters to people that have very fixed views, aren't really interested in information that may change those views, but really want someone that will justify the views they already have, and they will often listen to such a person every single day. And that's fun for them. And in some ways, such discourse can be fun. And I'm not saying stop listening to Alex Jones or whoever it may be that you listen to. What I am saying, though, is that when it comes to your investments, you cannot base your investment decisions on extreme rhetoric, political partisanship, and people that make assertions with no facts to back it up, and it's just pure emotion. You have to take what you're doing with your money, with your investment account, very seriously, and that means gathering the facts and aligning your decisions with reality as much as you possibly can. That means having accurate and real information. There are many people right now who are linking their views of what they think the stock market will do in 2019 to their political views. According to a poll done by Axios, 51% of people who say they're Republicans believe the stock market is going to go up in 2019, while 51% of Democrats say it's going to go lower. That's a even exact split. Meanwhile, only 27% of independents think the stock market's going to go up, with the rest of them believing it's either going to be flat or is going to go lower. It's an incredible, though, partisan split among the Republicans and the Democrats. And you cannot go through this year and link your investment decisions with your views on politics or Trump or Democrats or any such thing. You have to link it to the trends of the stock market itself and economic forecasts of the future, where we are in the cycle, and so forth. But unfortunately, in the alternative media, this is not what is happening. I'm seeing YouTube videos all over the place in which people are making claims that the stock market fell last year as part of some conspiracy to destroy Donald Trump and wreck his presidency. They claim it's George Soros selling stocks. Some claim it's China shorting stocks. Others say it's the deep state causing the stock market to drop. All people making these claims have absolutely no evidence for their assertions. And then some of them are saying that right now Trump is making the stock market go up, that he got a secret group together the day after Christmas to buy stocks, and he's going to make it go up, and that's going to be a sign of victory for Trump in 2019, and he's going to be able to make all these changes with that victory and remake society. And if he doesn't do it and the stock market drops, the drop in the stock market will be a sign that the Trump movement is completely destroyed and he's been defeated by these sinister forces. None of these assertions have any basis in reality, and I think they are much worse than the people that I disagree with in the financial mainstream media, because I see them as people with skin in the game who, you know, I have a different philosophical view on how to invest, how to trade. And I don't believe in holding during bear markets, just like I don't believe in stepping in front of cars and trains and stuff. That's the way I feel holding in a bear market is. But these people talking conspiracies about the stock market with no evidence, I don't know if any of them have skin in the game. And I really don't have, I think they're really doing a disservice to the people that are following and listening to them and hanging on to their words and giving them false information. Really, that's what it amounts to. And what you need to do this year is arm yourself with real information, solid information. And that probably is going to require going beyond YouTube videos, whether videos I'm making or someone else is making. You're going to have to do some serious work and digging for yourself, because you're going to have to think for yourself in these markets. When it comes to politics, in political partisanship, people often spend hours every night listening to Rachel Maddow or Sean Hannity or these figures. And these people are feeding thoughts for them, basically. And okay, maybe that's fun, but you cannot let someone do that when it comes to your money. You cannot. And the only way you can think for yourself is to arm yourself with the right information. And I'm going to help you do that right now by showing you some of the most important books you could read in the next 30 days to help you navigate the financial situation 2019. So the first book I want to show you is titled This Time is Different. And this book was written in 2009, 1 year after the 2008 crash. It's written by two economists, a professor of economics at Maryland and another one at Harvard. In fact, I believe they won the Nobel Prize in economics. But what this book does is it studies 8 centuries, 800 years of financial crises, bear markets, turmoil, to figure out what actually causes them and how do they play out. How do these cycles play out? Because if you can understand that, then you will know what the triggers are for the next crisis. And I'll just tell you right now, we have a trigger. And that trigger is the fact that the U.S. government now has a debt to GDP ratio, public debt to GDP ratio, above 105%. Typically, when a country has its debt to GDP ratio go above 100%, it falls into an economic crisis. Doesn't mean it's going to happen immediately. I don't think it's going to happen this week. But I think as this bear market plays out, this could end up being the story for the bear market in the next 2 or 3 years. In 2007, a bear market started that fall, but the idea that the banks were bankrupt did not hit public consciousness for another year. It takes a year for the causes and the ultimate reasons for a bear market to be discovered from when it starts. But the other ratio is the current account deficit. This time is different. Talks about that in particular. We're not at a crisis level for that in the United States yet, but that can swing very quickly if the U.S. debt to GDP becomes a crisis. It's not a crisis yet, but it's at a crisis level. So it's something to be very concerned about. Now, the other book I want to tell you to read is this set of 3 books by Ray Dalio. It just came out a couple months ago. The Big Debt Crises. It's similar to This Time is Different book because it also examines various economic crises and shows you the stock charts, the economic factors. This is kind of written like a reference book, easy to use. Don't be intimidated by the fact that it's 3 books in a volume set. It's fairly easy to read, and it's really a reference book with lots of charts in it. But get those 2 books and you'll be able to understand what is going on in the economy as you watch the news unfold over the next few years. You'll have a better idea what's happening. But that doesn't tell you how to manage your money, how to adapt to market trends. And for that, let me recommend some more books. First is this classic written in the 1980s by Stan Weinstein, Secrets for Profiting in Bull and Bear Markets. I tell people when they ask me this is the first book to read or the book that influenced my trading and investing career the most, more than any other book. And it tells you how to understand market cycles. It has strategies on how to use stop loss orders and so forth. And that book is actually based on this book written in 1966, How to Make the Stock Market Make Money for You by Ted Warren. And then I'll recommend to you, if you dabble in individual stocks, the classic book, Security Analysis by Benjamin Graham, written in 1934. And this book talks about how to read balance sheets, how to value a stock based on the fundamentals. So you won't just chase picks that some guy yells at you, whether it's on the television set, on Facebook, on YouTube, wherever it is. You don't want to just be chasing fad stocks anymore, especially when the stock market average is below the 200-day moving averages. This is why so many people are getting smashed in stocks such as NVIDIA. And finally, to really make things fast for you, I'm going to recommend my book, Strategic Stock Trading. It's only 124 pages, and what I did with this book is distill what I think is the best information in various investing and trading books and technical analysis and charting books into one quick primer that anyone can read and move on from there. Now, while cleaning up my house over the Christmas holidays, in my closet I found this box of books for strategic stock trading. That's the classic book on technical analysis that I wrote a couple years ago. And I think these books have been sitting in my house for months, probably over 12 months, and I want to, clean out the closet. And I think they can do you more good than they can me. So I'm going to basically give these books away today. Now, this book has been a top seller on Amazon.com. It sells for $14.95. As you can see, it's had well over 300 positive customer reviews. And this is because what I did with this book is condense what I believe are the most important things to know when it comes to understanding how to analyze a stock, how to understand the trend of the stock market, and when these trends change, which really is now more important this year than it has been in years, really. It may be one of the most critical years we experience, in fact, in our investment lifetime, prone with changes but also opportunities. Now, let me show you some of the reviews this book has gotten. Certainly not going to read all 300 of them, but here's the one that's at the top of the page. I've been through strategic stock trading twice now. The second time, both reminded me of how much I liked the initial read about a year ago, and it also helped me just see how right Michael Swanson is at predicting the current meme in this marketplace. What I like to buy is proven science based on a bunch of real world testing and feedback, not theory. I know many of the gurus would probably pull their hair out reading this book, but then again, many of the gurus don't even trade and live in a world of financial theory. Anyway, long story short, my portfolio is up big, and I want to thank Michael Swanson. Well, I want to thank you for taking the time to write this review. I'll just read one more. Excellent information that gives the small investor a plan to follow for success. I have read and reread it several times. It enables you to buy stock when it is cheap and out of the limelight. When you invest that way, you can relax and enjoy the write-up in value. His guidelines keep you out of trouble. You can identify bear market and take action while others are saying it's a buying opportunity. He does not advise buying at the top after stock has had a long run. Sure, it may continue up for a while, but the real money and real growth has probably been achieved. Again, thank you for writing this review. And actually, it's interesting, 3 people also have found it helpful. So again, you can, if you want, buy the book on Amazon for $14.95. But I want to do something else with the book and practically give it to you. Let me show you what I'm talking about. And here are all 70 copies right here. And what I want to do is send these copies out for free. All you've got to do to grab your copy is pay a very small postage shipping fee for the package and the postage, and I'll drop your copy in the mail for you. And to encourage you to do this, I'm also going to attach with the book a free 30-day trial membership to my private Power Investor trading group. This membership normally costs $97 a month. So if you think about the value of the book, the value of the membership, we're talking about a value proposition worth well over $100 that you can grab right now for practically nothing. All you got to do is take advantage of this offer before it sells out, because when these 70 copies are gone, this offer is gone. And I haven't done anything like this for a year and a half. I think it's been 2 years actually. But regardless, I'm just clearing out this inventory, and that's it for these books. I have no idea if it's going to take a couple hours or a couple days for these books to be taken. Just don't know what's going to happen. The last YouTube video that I put up, over 7,000 people watched it, so there's a lot of attention now on the stuff I'm putting out there because of what's going on in the financial markets, and which really makes this book more timely than ever to grab a hold of to navigate 2019. So if you're interested, scroll below this video and click the buy button. And if you happen to be watching this video on YouTube but not on my website, just go to wallstreetwindow.com and you'll see a picture of the book on the front page. You just click that and it'll take you to the offer. Once the offer is sold out, that image will just take you straight to Amazon to buy it there. And I'll be talking with you later whether or not you buy the books. I'm not going away anytime soon. Been doing this now since 1999, and now we're facing what I think is going to be one of the most interesting years I've seen in trading. So talk with you later.